Okay, let's have a look at regulated and unregulated brokers. So, what is the difference? Well, a regulated broker is someone who has paid an independent organization, a regulator, to basically have a look at their structure and make sure that everything meets the requirements in that jurisdiction. So, for example, let's take the FCA in the UK. You can't just open a controlled business type like a brokerage in the UK. You have to write an application. You have to give incredible amounts of detail on the people who are running that organization, the processes and the things that you've put in place. And you have to meet loads of requirements set by the regulator. You also have to pay an enormous fee. It's over 100 grand in the UK, okay, to get regulated. And the FCA is what's called a tier 1 regulator. Tier 1 is the highest tier. You also have ASIC in Australia and the SEC in the US. Now, these are all tier 1 regulators. And obviously, it takes a long time, usually 6 to 9 months. It can be longer, costs a lot of money, and it requires a lot of effort. You don't just get a piece of paper saying you're now regulated, you've got a license. It comes with these sort of terms and conditions. Okay, so leverage restrictions. The regulator, if you are tier 1 regulated, or if your broker is tier 1 regulated, they can't give you more than 1 to 30 in the UK or Europe or Australia, and they can't give you more than 1 to, I think it's 1 to 50 in the US on certain instruments only. On some of them, it's 1 to 20. There's also deposit requirements for a broker. So the broker must keep a minimum bank balance. I think it's about $500,000 for some of the regulators. So this is to ensure that the business is going to keep functioning, they're not going to go bust, and they can afford to pay people out. So this is all very good for traders. They also need to have segregated client funds. That means they need to have a totally separate bank account so that when you deposit money with the broker, it never actually goes to the broker. It goes to a separate bank account which the broker has no access to. And if the brokerage goes bust, your money is safe and you get it back. They also need to have insurance, huge amounts of insurance, millions, probably tens of millions, okay, to make sure that if the worst does happen, people are going to get their money back. And then they need to have a complaints procedure. There's way more than this, by the way. I just didn't want this video to go on forever. But there's tons and tons of requirements to make sure that they are supposedly honest people running the company and that they're going to stick to the law. Now, one thing I would say is obviously banks are regulated by the exact same regulators with the exact same conditions, and they break the law pretty much daily. And some of the things that banks have done, like money laundering for drug cartels, rigging the interest rates, famously rigged the LIBOR rate. And let's not forget breaking the world economy when they committed mortgage fraud on a huge industrial scale. But regulation is better than not having any regulation. Unregulated brokers, so they have no rules. There's literally nothing at all. They just open a company. They don't have to report to anyone. They don't have to answer to anyone. It's likely a scam. There is zero barrier to entry. I could open an unregulated broker tomorrow and start taking your money. If my company goes bust, you're not getting your money back. If you want to complain, there's no complaints procedure. Who are you complaining to anyway? A scammer. There's no deposit requirements. My bank account could be empty. You transfer me 10k of your money. It's now my money. Okay, this is what unregulated brokers are. So how do you check whether or not a broker is or isn't regulated? Okay, so the easiest and quickest way to check if your broker is regulated, go to their website and scroll all the way down to the bottom. And usually in the middle of all the risk warnings and legal mumbo jumbo is where you'll find whether or not they're regulated. So we can see the risk warnings here, regional restrictions, blah, blah, blah. And here we can see the 3 companies that make up Vantage. And straight away we can see a number for a regulator here. Okay, and we can also see the ASIC number down here. So we can see that they are tier 1 regulated, but why do they have 3 companies? Well, they have 3 companies to get around the leverage restrictions that we just talked about. So ASIC restrict leverage to 1 to 30. Now, they used to be able to offer 1 to 500. So in order for them to keep offering 1 to 500 to their clients, they set up other companies in countries or places where they don't have that rule. So they're all basically the same broker. They operate as a group, and this is very, very common now. A lot of the big brokers are using this group structure. One company within the group will have ASIC or FCA or whatever, and then the other companies within the group will have a different one or none at all in order to get around the rules. Now, I think this is a much safer approach. You are technically with an unregulated broker if you want 1 to 500. So I myself, I did have my first accounts with Vantage back in the day were actually UK accounts with FCA, and then I moved to the Australian one when the UK decided to stop offering 1 to 500, and then the Australians have since stopped offering 1 to 500. So now I'm with one of these two. I don't even know which one of the offshore entities. However, it's literally the same company, it's the same staff. I even still have the same account manager. Nothing has changed other than the stuff in the background, okay? So this is the only kind of unregulated broker you should ever be with, is a broker who is actually regulated somewhere via another company, if that makes sense. If you go with the sort of truly properly unregulated brokers that I talked about, where they don't hold regulation anywhere in any form and they've just popped up a brokerage overnight, that's very dangerous. You know, I don't encourage that. So this is how you check whether or not your broker is regulated, and you can make a decision. I get a lot of questions on this. People often say, you know, should I only go with a regulated broker? Can I trade with 1 to 30? The answer is yes, you can. If you deposit a huge amount of money and you're happy to trade with those restrictions, then yes, you can trade at 1 to 30 with a regulated broker. And if that's what you want to do, that's entirely fine. If you want to use systems like mine, which require leverage, and I need 1 to 500, I don't have that option, okay? So I need to be with a broker who's going to give me that leverage. And for that reason, I choose the broker I've been with, you know, for like 8 or 9 years now. And it doesn't worry me that I'm now shifted over to the Cayman Islands branch of Vantage, or whichever one of these two I'm with, I don't even know. Because I know it's the same people, it's the same company, and I trust them. So that's how you check with brokers, and that's you should now understand the difference between regulated and unregulated brokers. Okay, so in this video we're going to have a look at account types, and we're going to look at 2 types in particular. So that's ECN and STP. Now, before we even get to the account types, you can see that straight away we've got a giant pop-up on this broker's website, and you'll see this on a lot of brokers, and they're basically giving you a choice as to which website you go to. So in the previous video where we talked about regulated and unregulated, you now see we have a choice. We can go to the regulated website. This is regulated by the FCA. That's because I'm in the United Kingdom, so they're pushing me to the UK site. But as you know, Vantage are also ASIC regulated in Australia. So depending on where you live, depends on what this message will say. But for me, they're giving me the choice of going to the regulated UK site or the unregulated site. So let's go to the unregulated one, because this gives us access to the full leverage. Now, up at the top, if we go to trading and trading accounts, we're going to see the types of accounts that this broker offer. Right, so straight away we can see a pro account, a raw account, which is ECN, a standard STP, and then a swap free. So let's just have a quick look at these one by one, and then we'll start comparing them. So a pro account then, these usually have some pretty cool features for pro traders. They're usually a little bit cheaper in terms of commissions and lower spreads and that kind of thing, but they generally need a higher deposit. So they would expect you to put in 10k or 20k. We'll see what the actual conditions are. It's been a while. I mean, to be honest, I've been with this broker for years, so my accounts have been open a long time. The raw account then, so ECN just means that it has commissions on it, so you'll pay a commission with a very small spread. And a standard account means there is no commission, but you pay a bigger spread. Swap free, so swaps are fees that you pay when you hold positions overnight, and it's charged as interest, and you can actually be paid it as well. So a swap account, you'll either pay interest or get paid interest. So swap free then obviously means it's accounts that don't have that. And these are also called Islamic accounts. So obviously, because the religion does not allow interest payments or to be paid interest, these accounts are then obviously Islamic. So instead, I mean, they still pay a fee, they just won't pay interest, they'll pay a set fee instead, and it's usually more. So actually swap free accounts are generally more expensive. Right, if we scroll down, obviously you can have a look at this, these are all the features, but here we can see a little bit of a comparison. Okay, So we can see the pro account, we can see the raw ECN as they call it. So basically we have ECN and STP. So these are the ones that are really going to compare. As you can see, that the minimum deposit on the pro account is $10,000. Now on the sort of normal account, it's only $50. And you'll see straight away, look, the commissions here start at $3, and on the pro account it starts at $1.50. So if you are a pro and you can deposit more money, you will straight away get lower commissions, okay? And that's because they want your business. So I'm assuming most of you probably won't be sticking 10k in, especially if you're just learning to trade and it's your first account. So let's just focus on the difference between these two. So here you will see on the standard account that commissions are 0. Now commissions are 0 because the spread is bigger. So you can see here it's just showing a typical spread. So you'll pay 1 pip and no commissions. Now on this account you might pay 0 spread, so 0 pips, but you will pay a commission. Now if you're trying to work out which one's going to actually be cheaper, they're generally exactly the same in terms of the overall cost. So if you put on a trade at say 1 lot, the cost of that trade on this account might be $6. What you'll actually find is it might also be $6 on this account. There's usually very little difference in it. Now, this does, although it says 0.0 pips here, the spread is floating. So it might be 0.0 pips a lot of the time, but you'll also see it at like 0.1 or 0.2 or sometimes 0.5. Now, you're paying that as well as the commission. So in certain circumstances, you know, this type of account, the raw account, can actually be a little bit more expensive. What I usually recommend is if you're running algorithms, you want an ECN account, and if you're manual trading, you want an STP account. That's how I've always done it, and that's how I find it works best. But hopefully now you should see, you should understand the difference between the account types. And obviously, if you do have a little bit more money, then you can go for a pro account, and you can obviously cut your commissions. So the only choice you need to make is, do you want low spreads and a fixed commission? Or do you want slightly higher spreads but 0 commission? Okay, so these are the account types that you need to choose from.